Marked the beginning of gold's role as money and a store of value across civilizations. Gold, from sacred metal to global investment asset. For thousands of years, gold has occupied a unique position in human civilization. For thousands of years, gold has occupied a unique position in human civilization. Its enduring luster, natural scarcity, and resistance to corrosion have made it far more than a simple metal. Gold became a symbol of power, wealth, and permanence, and eventually, one of the most trusted instruments for preserving value. From ancient kingdoms to modern financial markets, the history of gold is inseparable from the history of money itself. Origins: gold as power and currency. As early as 3000 BCE, ancient Egyptians mined and stored gold as a representation of divine authority and royal power. Gold was associated with the gods and the afterlife, reinforcing its sacred status. By the 7th century BCE, the Kingdom of Lydia introduced the first known gold coins, transforming gold into a standardized medium of exchange. This marked the beginning of gold's role as money and a store of value across civilizations. Gold and the global monetary system. In the 19th century, gold became the foundation of the global financial system through the gold standard, under which national currencies were directly backed by gold reserves. This system provided monetary stability and limited excessive money creation. However, the gold standard began to weaken during World War I and World War II, as governments required vast financial resources to fund military operations. The final turning point came in 1971, when U.S. President Richard Nixon ended the convertibility of the U.S. dollar into gold, an event known as the Nixon Shock. This decision effectively ended the gold standard and ushered in the era of fiat money. Ironically, this moment marked gold's transformation from monetary anchor to safe haven investment asset. Historical gold price increases. After being detached from fixed exchange systems, gold prices became market-driven and increasingly sensitive to global events. 1970s. Gold prices surged amid high inflation, oil crises, and geopolitical tensions. 1980. Gold reached a historic peak, driven by economic instability and Cold War fears. 1990s. Prices stagnated as central banks sold gold reserves and confidence in financial markets grew. 2008 to 2011. The global financial crisis reignited demand for gold, pushing prices to new record highs. 2020. During the COVID-19 pandemic, gold once again reached all-time highs, reaffirming its role as a hedge against uncertainty. Throughout history, gold's price has reflected fear, inflation, and declining trust in monetary systems. Government policies and central banks. Central banks play a critical role in shaping the gold market. While gold no longer backs currencies, it remains a key component of national reserves. Central bank decisions to buy or sell gold have repeatedly influenced global prices. In the late 1990s, many central banks sold large portions of their gold reserves at historically low prices, decisions later criticized as strategic miscalculations when gold prices surged in subsequent decades. Controversies in gold's history. Despite its prestige, gold has been surrounded by controversy. Price manipulation allegations. Large financial institutions have faced accusations of manipulating gold prices through market-fixing mechanisms and derivatives trading. Environmental and social impact of mining. Gold mining has been criticized for environmental degradation, toxic waste, and social conflicts, particularly in developing regions. Gold and political power. Gold and political power. Gold. From colonial exploitation to modern conflicts, gold has often been a hidden driver behind territorial expansion and political intervention. Gold in the modern investment era. Today, gold exists in multiple investment forms: physical bullion, jewelry, digital gold, futures, and exchange-traded funds, ETFs. Despite the rise of complex financial instruments and cryptocurrencies, gold retains its relevance, not because it generates yield, but because it preserves value during systemic stress. Gold is not an investment driven by short-term speculation. It is a historical asset of trust, forged across centuries, surviving the rise and fall of empires, currencies, and financial systems.